Here we are on a chart of IWM, and we already have a position on IWM. It's a complex back ratio spread trade with a number of short strike positions. First I want to show a chart of approximately where we are. We've had a very nice run here on IWM. So let's just draw a few trend lines. And if you're new to drawing trend lines, technical analysis and drawing trend lines is somewhat of a science and a lot of an art. So when you're drawing, you just have to realize that it's going to be somewhat subjective. So here we are in an upward trending channel. We came down to the bottom of the channel here, and now we're heading up to the top of the channel here. And what I mean by a channel is, if I right click on this and I extend this to the right, I would expect, based on this chart pattern, that the IWM is going to come up here somewhere in the neighborhood of about 70, and then about 70, and then we'll probably pull back just a little bit. Okay, now is that for sure going to happen? Absolutely not. But we're going to assume that for this particular trade. Let me just give credit to the guys over at Thinkorswim for this platform. If you have a trading platform that you're happy with, that's great. If you're looking for one, I highly recommend going to Thinkorswim. They're at thinkorswim.com, and they have the finest options trading platform that I know of, and I've traded on quite a few. Okay, we're looking at the trade page for IWM, and you see we're currently trading at 68.70. We're up 63 cents for the day. Let's take a look at the Analyze page and see the position that we currently have on. This is a risk graph of our current position in IWM. The low down here, the low of this red line, means that we have a maximum loss. You can see over here we have a maximum loss of $345 to the downside. To the upside, we have a maximum loss of about $240. If we move quite a bit lower, we make more money. And to the other side, if the market moves significantly higher, we make more money. Sometimes trading isn't all in what you can make, but it's what you don't lose. And what I'm concerned with right now with this trade is I'm concerned with these low spots right here and right here. You've probably heard of something called a trade adjustment. So we're going to do a trade adjustment, and we're going to add this trade to our existing trades. As an example, in our IWM trade, we open this up, we'll see our strike prices, we'll see the positions that we have, and over here to the right side of the screen you can see that our buying power is affected by $400. Okay? That 400 in parentheses means holding this position is costing us $400 worth of margin. Let's go back to the Analyze page, and we're going to add this last trade that I've got queued up. We're going to sell 2 April 69 puts, and we're going to buy 1 April 71 put, and we're going to do that for a 60-cent credit. Okay? I'm going to lock this in. I'm going to lock this in for 60 cents. That's what I'm going to route this trade at. 60-cent limit credit, which means the minimum that I'm willing to accept to sell this back ratio spread is going to be a 60-cent credit in my account. The point I want to draw your attention to is this low point right here. And I want you to watch what happens when I check this box and add this trade, which is going to be a simulated trade, to our current positions. Okay? see our risk to the upside just dropped to $85. Watch this number right here. Right now our risk to the upside is $85, and once we cross over 72, once we get north of 72 handles, now we start making money again. Okay? Now it also had an effect over here as well. If you remember, our risk wasn't $680 some. We'll uncheck that box for a second. Let's check to see what it was. Our risk was $345. However, if you recall back in our technical analysis, we said that we expect the IWM to travel a little bit further, a little bit higher. Maybe it'll hit 70. When it hits 70, then it might come back a little bit. So we expect it to go from right where it is at 68.60 up to about 70, and then maybe we'll see a little bit of a pullback. But for right now, this trade improves our risk graph. The market is heading up, and what we want to do is we want to adjust this trade so that as the market moves higher, we're going to make more money. So we're going to right click on this, and we're going to say confirm and send. And if you notice, I am doing this in a paper money account. Part of the reason I'm doing it in a paper money account is because when we route this trade at 60 cents, it's probably going to fill right away. 60 cents is the midpoint. So we'll probably hear a little bit of a beep here in a second that will indicate that our trade is filled. As time goes on and this risk graph changes, we'll make additional adjustment trades to potentially raise this up even higher in the middle and raise this up on the low side just a little bit. The reason being is we're extremely profitable if the market moves way down. We're also extremely profitable if the market moves way up. Ultimately, what we want to do is we want to create a trade where we've got kind of an umbrella over this whole area, and that's going to employ some strategies. We may put some broken wings in here. There's our beep. We were just filled on that trade. So did you notice when we got filled how this changed? It changed to what we had simulated before. So this is now our new risk graph of trades that we have on in this account. As the market continues to move either up or down, we will continue to put trades on and make adjustments to this trade, so we're reducing risk in the areas where we believe the market is trending. Make sure you tune in to see what we do next to make adjustments to this trade, and with the intention to bring this red line completely above this dotted line, which is our 0 point.